Hello, what's going on? Oh, suffering in San Diego heat with no air conditioning because I live close to the coast. So if I sound lethargic, that's why. Hello, Andy.
Hey, Steve. Hey, Scott. Hey, everybody.
Andy's peppy because he's got air conditioning there in Texas.
Yes, 72 degrees.
Not here. All right, let's get into it. Welcome to the trade of the week, everybody. Thanks for showing up. Disclaimer slide, always the first off. We're just going to show you some ideas, some concepts, some technology. We're a software as a service company. We are not registered advisors, brokers. If you need financial advice, respective to your situation, you gotta contact those guys. So just a quick reminder here: anything you see and hear in this webinar today should not be construed as investment advice. All right, very good. It's almost over. Well, it just started, but what's almost over is your ability, if you haven't signed up yet, to sign up for the test drive. It's a 5-day in a row event. The last day to sign up is Wednesday, the close of business, and that'll take you from Thursday to the following Wednesday. So you'll get 5 days in a row, regardless of the weekend, but we're going to close the registrations tomorrow evening. So if you haven't already signed up for test drive, it's a great way to use all of the features. And I'm talking to some of you who might even be at the standard version. This is an opportunity to kind of cheat up to the premium version for 5 days. And it's only an $8.88 fee, which covers basically live data and things like that. So kind of like HBO Showtime, we do this once every 3 months, 4 times a year, to give people an easy way to come in and kind of kick the tires without having to set up a full monthly subscription. But good news is we've got a promo code coming up here at the end of the webinar for a monthly or annual, so you can use that if you're on the sidelines and thinking about it. All right, you're not alone with trade ideas. We've got a vibrant community of traders that work here. We've got a lot of ways to help people navigate the learning curve. We're a 14-year-old product, and we've got a lot of technology here. So right off the bat, this screenshot, Learn to Profits, is basically a screenshot of Barry Anderson's live trading room, and he can have 500 or 600 people in there on any given day. And the best thing about that room is it's a high-quality room, and it's also free. So it's giving a lot of rooms out there for $99 a month a good run for their money because we are free. Aside from Barry trading and sharing his screen, helping you with technology tips and advice on using the Trade Ideas platform, there's a handful of other really good traders in there as well who have kind of found their niche in sitting into this room and helping other people. So you'll start to see if you join that room who some of the players are and what they're talking about, but it's an interesting place to hang out from bell to bell, Monday through Friday for sure. Beyond that, we have the afternoon webinars. That's what we're doing right now. It's basically 5 o'clock Eastern. Every day is a different theme. Monday is myself and Jamie. Today is myself and Andy going over the trade of the week. Tomorrow, Dan and Brad make an appearance on the QA demo. And then Thursday, Andy puts together some content to share with you all on the Thursday afternoon trading studio. And Friday, we have a open forum, which basically is like this GoToWebinar here. It's a 3-hour session that's just open to anybody that wants to come in and ask questions, and it's a great way to get visual support and get the answers that you might be seeking, and you don't want to just chat via email. You can come in every Friday from 11 to 2 Eastern and get a great opportunity to do so. This week, normally we would have Trade Ideas University, which is Monday through Thursday, but this week, because of the test drive, we have over 1,000 people coming in and trying the product for a week, and so we've moved for this week over to kind of a similar Friday support session format. 2 hours every day. We've been hosting group questions, and we'll continue to do that Wednesday, Thursday, and that will take the place of the Friday support session. And those are all starting at 12 o'clock Eastern, and they run for 2 hours. Check your email if you're a test drive person and have not looked into that. So a lot of good reasons to know that we're trying our best to get everybody up to speed on our product as quickly as possible with the webinars, the live trading room, et cetera, et cetera. Here's just a breakdown of the classes that'll start again next week. Monday is 101, Tuesday, Wednesday, Thursday. We round out the Thursday class with a lot of advanced topics. And so, send us an email if you're interested on that and don't really know where to look. We will help you. Okay, subscriber growth, just a nice chart showing very nice parabolic growth. I think a lot of that has to do with the onboarding and the support we give. And getting into the topics of the webinar now, we always start off with this slide, the man and machine. No man is better than a machine, and no machine is better than a human with a machine. And that's where we come in with trade ideas, to try and help the human trader with discretionary decision processes that still have to take place, but our technology is really good at curating and giving trade ideas, for lack of a better term. So today, again, like Scott mentioned on the onset, I can see some questions coming in already. What we're going to do is we're going to allow more people to pop in. They usually kind of slowly bleed in. Going to go through some of this preconceived content here. We'll get through it rather quick, and then we're going to go to test drive questions. So if some of you are using the product for the first time today and not quite sure, using the test drive, and you popped in here for a little bit of support, we'll take care of that. We just want to get a couple other things out of the way first. So we'll go to the market recap first, which is what I will do. And let's see here. Right, yeah, that's where we want to go. So let me minimize that. All right, and let's go to the SPY, the S&P 500, and let's expand this chart. Kind of an interesting day today. For those of you that tuned in yesterday with Jamie, I spent a lot of time during this segment talking about how there really is zero case to even be bearish or even think about being bearish right now. We have a lot of charts just continuing to move higher, or additionally the four sectors here that we're going to look at, four indices, I should say. But what happened last night was Google came out with good earnings, and we closed, relatively firm yesterday. Again, I'll talk about this. Nice 3 days of pullback. That orange line is a very significant line going back to these levels of supply back here. So now all that's left, if you're above this line, which we are, is the all-time highs right up here. And we are approaching that, and it's probably a foregone conclusion that we are going to test those all-time highs. So, yesterday we had a nice couple days of pullback, little green candle, resting really nicely on that 10-period moving average. Looked really poised, but it didn't take long for the good news to come out after market yesterday, and Google earnings jumped up at least 40 points on Google, gapped the spiders up a little bit and gapped the Qs up even more. But before we get to the Qs, I'll just stay here on this one. Not a bad day. I mean, we'll get into it when we talk about the AI. The most difficult days for human traders, and it appears also for AI, is a large gap up day, and especially a gap up day that spends most of the day slowly bleeding back into the gap. But we'll get into that. But what I'm saying here is the S&P's had a pretty decent recovery. The last hour and a half of the day saw some buying. So at the end of the day, when the smoke was all cleared, we have ourselves kind of a spinning top doji here. So no harm, no foul. Opened up, went higher, went lower, threw some elbows, and settled pretty much right about where it opened. So nothing really negative on the spiders. Let's look at the Qs. The NASDAQ has been leading us higher. And again, this one gapped up a lot more today because of the Google component and gapping a lot of software, internet, and technology stocks up with it. But Qs with the bigger gap, they had a little bit more selling in order. So we've got a bit more of a red candled body here, but still, guess what, everybody? We did make all-time highs on the open today in the Qs. Again, no reason to be bearish. And if anything, the NASDAQ and technology here are certainly helping lead the way as a leadership sector. I'll save that one for last. We'll go to the Dow, the diamonds, the DIA ETF. DIA still has some work to do. I mean, for the most part, the S&Ps are up to here, past this level of selling back in February. And so kind of respectively on the chart, the Dow is lagging. So we have the NASDAQ leading. We have the spiders, S&P 500, the broadest based index we can use as a benchmark, also looking very healthy. Again, closed above that orange line. Looking back to the left, a lot of selling pressure back here, and it looks like we've worked through that and closed above it. But there's a big but today that Andy pointed out to me that I hadn't really noticed until we got close to the webinar, and that is the small caps. Take a look at the IWM, which we always look at. If that's not a great example of what you call an engulfing candle, which in this case it's a bearish engulfing candle because it's red, it took out yesterday's highs and it took out yesterday's lows handily, and it's a wide candle covering up, thus the word engulfing. It's a bearish engulfing candle. So again, I don't want to even start hinting at the winds of being bearish, but this was certainly interesting. And our job is to be aware and catch early signs or early signals of things and keep them in the back of our mind for future discretionary decisions. But this is not a good day for the Russell 2000, the small caps. Not looking good here on the IWM. Maybe tomorrow they gap back up and this means nothing, but I just want to at least throw a little bit of caution to the wind in that the small caps did not participate today like everything else did. So that is definitely something of note. We were also joking earlier in the webinar today is Tesla's hanging on by a thread here to some technical levels. I don't know why I brought this up, but it's a popular stock and it's been in the news lately with the CEO kind of trash talking the short sellers. But in the end, it doesn't matter how many shares Elon Musk can buy back as a CEO or what he says. At the end of the day, it only really matters is what the herd is thinking. And the daily chart is our footprint map of what the herd is thinking. And you saw how the NASDAQ closed pretty strong today. Tesla's not looking so good. It's knocking on these doors. So if it takes out the low from today and yesterday, watch out. There could be some more downside. Again, I don't know why I brought that up. It just kind of came to mind. Andy, do you have anything you want to add to the section here?
No, I totally agree with you, with Steve. I thought it was going to be an uglier day, but of course the stick save ramp capital in the late innings, and the spiders and the Qs got a little bounce and then did a little doji, although the Qs is more of a kind of a spinning top. Yes, I agree with you. IWM, it's hard to say anymore, because they could just pass the baton off to to the major big caps or whatever. But
well, it was poised.
That is an ugly day, yeah.
This cup and handle was kind of poised to possibly do things, and we had a gap up, but somebody out there forgot to mention the volume. Thank you. Look at that volume. That's nothing to sneeze at. Look at the volume yesterday. The volume today is 5 times what it was yesterday. All right, so somebody wanted out of some small caps today and took today's gap up as an opportunity to do so, we shall say. All right, so that is the market recap. Again, the takeaway, no real reason to be bearish at all. Everything looks go. NASDAQ went to all-time highs today. S&P is cleared above its pivot line there. Not a bad spinning top after a big gap up today with a good recovery. But the one cautionary tale certainly is small caps. So keep an eye on those small caps tomorrow. If they don't want to play, then maybe you know why and you can pass them over. All right, so next stop is going to be going through the Holly recap. And Andy usually takes over for that. You want to take the screen or just use my screen? It's your call. You're on mute.
I'll go ahead and take it, Steve. There's not a whole lot to say about it today. Let me.
As Andy's taking the screen and getting set up again, I think if you were to poll all 4 or 5 of the traders here that work at Trade Ideas and ask them what the worst scenario would be for a morning, it's probably going to be a gap up, and even worse, a gap and crap or a gap and bleed. So us human traders certainly have struggled with that over the years and decades. And it appears Holly, the AI, not just today. Again, what I was going to say is if you polled all of us independently, Sean, Steve, Jamie, Michael, Andy, myself, 5 of us, and asked what's the worst scenario for the AI performance, and we would all say the same thing without knowing what the other was saying, and that would be a gap up day, without a doubt.
Absolutely, and honestly, when I was an avid day trader, I don't do that anymore, but did it hard for 17, 18 years, and that was the day I dreaded the most, were the big gap ups, because it's hard to get, and you can see in the spiders today, it's a perfect doji. It just seems like that. With those were the tougher days, you feel like you missed a move, and anyway, it's the same for Holly, and a big gap up. Let's just take a look, at the spiders. I'm not going to go in and start breaking down a bunch of trades because, for every good one I found for you, there's a bad one out there. And Holly's had a great stretch lately, man. The last couple of weeks, it's been off the charts. We've added a few new strategies. I know a lot of people are excited about the vault. I think we may have had one trigger today. Do you remember what? I think it was 2.0, wasn't it?
It was 2.0, and it was the vault. And just a quick side note, Barry popped into the support thread today from his live trading room and says, wow, everybody that's been watching the vault, which is a strategy we've had for a couple weeks now, everybody is loving it. And the idea is to stay with things that work until they stop working.
Right. Well, this is a great example of the vault. That was a no pain trade. There's your alert right there. And Holly did get out for basically a flat. I'm not sure how that happened, but because she had obviously some tight parameters on this.
Nervous.
Yeah, she was nervous because it really didn't go against her or anything, you know. So, but anyway, that's where you come in as a trader and tell yourself, hey, I'm not going to scratch it, you know, a trade and just pay commissions. I'll at least give myself, you know, 15, 20 cents, and then you get the 67, you know, cent move afterwards. There was a great one this morning, right off the bell, but like I said, I'm not going to just go through and pick out the ones because there was some ones that were not so good anyway. And this is a kind of day, all you have to do is look at the major averages. It's hard to get any traction anywhere. Gap up, and of course you move higher, and then you sell off, and then you only to come back and bounce. So all said and done, there is your really almost doji, a spinning top with some very long wicks, but whatever you want to call it, it is a tough day. And like I said the other day, I'm not sure what webinar this was in. Every strategy, you know, is at the mercy of the market a lot of times. I don't care what kind of strategy you're using. So, but anyway, you know, let's take a look here. Holly 2.0 was up 69 cents. Neo, which is more volatile, Neo got out to a really strong start this morning, but you know, it is. You know, it's just more volatile. If you can make some bigger money in that one, but at the same time, on a bad day, maybe it's going to lose a little more money than the rest of them, as you see here. But Steve, yeah, other than the generalizations, it's not a good day to.
I had a thought.
Toot our horn, but.
Well, there's not a lot of horn tooting today, but in the aggregate over the course of 2 years, there's a lot of horn tooting. The AI has definitely logged a lot of. Has definitely logged a casino odds type of chart there. The odds are going to favor it in the long run. But one of the things I noticed, and Andy as well, is we went through the 3 segments today, and the AI was basically trying to play tennis with just a forehand, you know, and we can't override it. It is what it is. It's only going to trigger if the planets line up and forces it to trigger. And what I mean by that is we had a gap up day today and then just a slow bleed for 2/3 or 3/4 of the day. And when you look back on the directional swings or attempts that the AI was making, only 2 or 3 at the most on the short side. The AI just, you know, kept looking for longs. And again, for whatever reason, whether you're a human trader or the AI, these big gap ups seem to really throw a monkey wrench in a lot of setups and a lot of people's plans. You got to remember last night when the AI was doing back testing and getting its quantitative combine set and creating those win percentage scores for today and deciding which strategies were going to make the final cut. It wasn't necessarily planning on, okay, tomorrow's a gap up. How would be the best way to configure this? No. AI never really knows how the market's going to gap up the next day or up or down. It just plays on what is in front of it. And it was just an interesting note to come full circle here that the AI just kind of kept trying to hit forehands today as the market was bleeding off into the gap, and it wasn't working. So that will happen. Can you filter Holly by volume? Good question. I'll answer this one, and we'll save the rest for about 15 minutes away. You cannot filter by volume. You can filter by strategy. So, you know, again, on our main website at the very bottom, trade-ideas.com, at the bottom footer panel under frequently asked questions, there is a description of all the Holly strategies. And so you can come in each day and see what is on the AI list of strategies that are ready to go today and what their scores are for win percentage and back testing. And then, you know, just keep an eye on, you know, what's coming out in terms of volume. I mean, I would refer you to the single stock window. Let me take it back, Andy. I'll go ahead and take it back.
Okay.
I'm going to show you guys the single stock window here. So, you know, this single stock window for the newer people can be basically launched from the new column menu here, single stock window. And I've added a bunch of data points, which you can also do when you right-click configure module. But one of the first things I look at when I pull up a stock or click a stock in Holly is what's the relative volume? Well, ACIU was doing 3.7 times normal volume. So Christian, who asked that question, the first thing I would do is pull up a stock and look at the relative volume. If the relative volume's hovering around 1, that's only going to be normal volume. And I bet you a lot of these scans are filtering for at least higher than normal volume. But look at that to start with, and then the 5-minute and the 1-minute filter data points I have put into my single stock window, I'm looking at that as well. And these are in percentages. So the 5-minute candle, if it said 100%, that just means the last 5-minute candle has done normal volume. Well, if that 5-minute candle said 500%, I would get excited because that is showing me that that 5-minute candle is doing 5 times normal volume. So it can be done, but it's not a filter that you can set. It's basically an eyeball. And that's what I would recommend, Christian. The single stock window is the very first thing I look at every time I click into something. Well, the first thing I look at is the daily chart. Then I look at the intraday chart. And then I go to the single stock. So from left to right, that's kind of my workflow right there.
Mm-hmm. And also, Christian, if you are asking about share, how many volume shares are traded. So in other words, if you're trying to avoid the stocks under 100,000 shares or something like that, there's nothing really you can do. You can keep an eye on the strategies, and maybe you'll see that some of them have more shares traded than others. But I'm not sure exactly what you were asking for there, but Steve brings up a good point, but you can also see the volume right above his relative volume there too. That's standard. It will always be in there, the relative volume and the volume. So,
and the average daily right here.
Exactly. So, you can put it in a single stock window to help you avoid the ones that aren't doing very, very much volume. Okay.
Yeah, David. If it came out, and trust me, we see it all the time on this scan right here. All right, look, 926. You were saying 1400. Not too far away. So they come PII. What did that go out? Oh, there you go right there, 1400. So if I was short PII going into the close on this last bar, and I was monitoring 5-minute candle volumes, I'd be like, yep, I'm staying in this thing. I'm going to duct tape my hand to my knee so I don't hit the sell cover button. So.
Steve, I think we lost you.
I was talking into my mic after I cleared my throat, darn it. And he knows I don't go silent for more than 10 seconds. So, yeah, so that's basically it for the Holly recap. Didn't light the day on fire necessarily, but it's just one day of many. And I thought the directional bias was interesting. Wasn't a lot of, I might have had some better values up here if there would have been more short strategies, but a lot of the short strategies we plug into Holly and let her optimize don't necessarily have a gap up because it's just no real good configuration that basically came out of the machine learning. All right, let me move along here. I think it's time next for the trade of the week, which is the basic theme of this webinar. And let's open it up a little bit. The trade of the week this week was and is Sonic Burger. Andy and I noticed a lot of interesting things happened. A lot of stocks were kind of taken to the woodshed today. Look at Sonic there. Look at Zendesk. I was saying this one looked good last week. There's another engulfing candle. Not a good candle there for the Zendesk. I think of Sonic Burger. It makes me think of Shake Shack. What happened to Shake Shack today? Oh, they also got taken to the woodshed. Well, a lot of stocks were taken to the woodshed today on an individual basis, but let's get back to the item at hand. Sonic, this is actually an all-time high that triggered, well, we went to all-time highs today, intraday. We went a little bit higher on the open, took out yesterday's high. So every new high on the daily chart is actually going to be a new all-time high. And we have a short float. You guessed it, my single stock window. It's in the high 20s, 27% at last reporting. 27% of the position holders in this stock are not being very wise. They're being very stubborn. And so really the order of the day was to do what's been successful on some other trades of the week is look for a nice short squeeze. And the only thing better than a 52-week high short squeeze in my book is an all-time high short squeeze. And that's what we were hoping to get a little bit of it yesterday on the trigger. But today, honestly, guys, it's the downdraft of the market. That's why I showed you a few other stocks. It took everything. What happened to McDonald's today? Well, that one not that bad. But Sonic is showing the shorts that they have been wrong, and there are, I can say honestly this morning as the stock made a new all-time high, that means 0 short sellers are making money in this thing. And when you got a lot of other short sellers who are not making money and they decide to bail, you don't want to be that person that's stuck in the fire in a crowded movie theater deal. So ideally, that's what could have happened today or yesterday, but didn't. We got a downdraft, so be it. The stop loss, I think, in this one is, where is that? The trigger was 36.51, I think. Or no, where was the trigger in that one? It's 37, I believe. And so 34, it was roughly 34.
Yeah, it's about 37. Mm-hmm.
Yeah, so I think right about here is the downside stop, and that was put to withstand a possible pullback. Hey, guys, this could happen tomorrow on the open. You could have a drive down in the first 10 minutes because that's the way stocks work a lot of times. The pent-up sell orders of people get plugged through the system overnight. Market opens up, bell rings, and the big market makers and algorithms sometimes punish stocks and try to run stops right on the open, only to bounce back and close even higher the same day, and that's very frustrating. So I could see a case to where, you know, we could come down here to the 34.70 level. That's where we found support before, and the algos, they can do it in a blink of an eye. So it's possible. So that's why the stop was placed down below this low down here with a little bit of wiggle room to go. So what I'm trying to say is swing trading is not day trading scalping. It is a game of patience and letting things develop and unfold as they're supposed to. You know, I don't like seeing red bars, but there's no reason to ditch this trade. Nothing's changed. If the market turns around and catches a bid tomorrow, maybe we get some good news in the economy. Maybe there's a reason for us to keep going. We've been in a bull market for a long time, and buy the dip still seems to be working until it doesn't. But there's really no reason to fret or change your opinion in this no man's land that we find ourselves right here. So yeah, we're a buck under the opening price, but we have $3 basically slippage in a swing trade, and that's the idea of the trade of the week. It's not a day trade scalp; it's a swing trade, something that can last for a couple weeks. Maybe we get the move in 3 days, and we get lucky and we sell half. That's the perfect scenario, and then we just patiently let the other half work without any anxiety or fear on that second half because we took profits on our first. What I'm saying is stocks breathe. They go forward 3 steps, back 2 steps. But if you keep doing that, eventually you're going to have a bull market, and that's what we have. So we just got to let it work itself out. I was going to check in with the one from 2 weeks ago, LSCC, and that one's holding up okay. Definitely holding up okay. It moved to new 52-week highs today for sure. But we're going to take a look at sectors later, and you're going to be surprised what the semiconductors look like, Andy. So I'm actually surprised Lattice held up as well as it did today.
No, because I noticed a couple of Holly traders today, like AMAT and M-Chip, and then I looked at so I'm not going to be surprised because I did look at it.
Yeah. So, all right. Yeah, that's an ugly chart right there.
Yeah.
For sure. We'll get to the sectors in a moment. Let's see. I think I don't know if there's much else I can say here other than, you know, it came off of my Squeeze Me scan. So NC Sonic. The Squeeze Me scan, that's a good point. I look at the scan maybe 2 times a day when I try to find things and set alerts. A lot of you guys might remember last week I set a few alerts from this scan and shared the cloud links with you. Well, a lot of those trades actually worked until today. Today brought a lot of them back to reality, unfortunately. Let's take a look here, what we got going on. Yeah, kind of a little mini downtrend there. We looked at Shack, that's ugly. AGIO. Big red candle. See, when I said earlier, guys, a lot of stocks are being taken to the woodshed. This is what I was talking about as I go through some of my scans. A lot of red candles today. So I am not going to go out on a limb and try and share some shareable alerts today because I just don't really see anything and I don't want to mark something up just for the sake of marking it up. So all right, that's it for trade of the week. Where I want to go next is just one more item. I want to go through, since we just saw a lot of single stock red candles and some damage, every now and then we take some time to go through a sector glance. So I want to go through a sector glance and then give you guys a heads up when we're finished with that. I know there's a lot of test drivers and maybe they're in here and there's no question that is too simple. Don't be afraid to ask anything. I want to at least open up 10 minutes or so for Q&A for people who want to get some help in configuring, or how do I do this, how do I do that. If you don't have a test drive question, you could also, we'll combine these 2 content points here. You can send in a chart request and let us know if you're long or short or thinking about getting long or short. and Andy and I can take a look at it and give you maybe some ideas of what to look out for and what could possibly happen. So if you're getting questions ready, wait until we're done with the sector glance here, and then we'll open it up for some questions. So what I'm going to do is open up my daily chart a bit wider so we can see all together. And this is a sector top list. There's no scanning. I just dropped about 30 ETFs in here, and then I'm sorting it by change from the close. So this tells me today who is the baton being passed to in terms of sector rotation. And today, steel definitely wins hands down, giant gap up, but look at that topping wick, that big old topping wick. This thing got ahead of itself. I would never come in and buy a chart that looks like this. Statistics and my personal experience says a portion of this gap is probably going to want to be filled. So that, in addition to a giant reversal wick, I wouldn't jump pile into any steel stocks here, but there's definitely strength there. XLE is energy. It's just kind of range bound, but didn't sell off much today. So energy was rather strong today. Oil, the commodity, inside day there today. I've gone through this thing once, and there's a couple of nuggets in here that we'll stop on. That is a natural gas. Just dismiss that. Gold miners, well, they've been struggling lately, but they did find some support down here at prior levels. You know, there could be a case for an oversold bounce in the gold miners if there's more selling tomorrow. You could keep an eye on the sectors, and GDX is the gold miners. There could have a relief bounce after it came down and tested that level, but not a lot of conviction on that chart. Same with the solars. The solars, you're just like somebody dropped a ball, and that ball is just bouncing, waiting to find the crack in the floor here. Not really excited about that. Agriculture, forget that. Silver is going to be similar to gold, but that's the commodity. These are the junior miners, very similar to the gold. Could be right. This was the one that caught my eye. Of all the indexes we've looked at today and all the charts we've looked at today, I haven't seen too many that look like this. And this is XLV. And what is XLV? Well, if you don't know, you can cheat. It is the healthcare sector. So for whatever reason today, the big money was moving or strong, but the chart looks the best. I mean, other sectors were strong today, but steel, as I said, does not look like a great chart. This does. There could be some follow through tomorrow on healthcare. So if you have some favorite healthcare stocks you're watching, keep an eye on them tomorrow, because that's a pretty decent pattern. You can see all this energy expended up here, and then we went sideways. Remember I said sideways consolidation is more healthy and more bullish than a pullback in price in terms of consolidation. Not only that, when we look left, we've cleared a lot of this congestion back here, which would become current congestion here for the most part. So that's a good looking sector there. I don't care to want to know why or figure out why. All I care is what the footprints in the sand are showing me, and that's showing me that this thing might have some meat on the bone tomorrow, breaking out of a nice congestion after a big move with a lot of gaps there. That actually was the best looking one I could find today. Dow still looks like it's got some work to do there. Technology looks just like the Qs. That's the technology. Here's the spiders. We've seen that. Here's NASDAQ, treasuries, financials. Financials, you'd like to see these doing a little bit better to help lead the market and drag the market higher, but they've still got a lot of work to do as well. Some China stocks not looking very healthy at all. Brokerage stocks bounced off the 200-day moving average, pulled back for a couple days, consolidation, tried to move higher, but got caught in the mud there. Gold, the commodity, oil services. Interesting. Those are not looking too good at all, even though oil is trying to hang in there. The oil service sectors are having a hard time. Now we're getting down to the bottom of the barrel here. Now IBB, this is interesting. Looks kind of like healthcare did, right? But didn't really have the good day that healthcare did. But nonetheless, biotech and healthcare, distant cousins, not bad there as well either. So biotech and healthcare were really the two that caught my eye today. Banks not doing much. Here's the semi. You talk about another ugly candle. The semiconductors had a rough day today.
They did, didn't they?
And that's really puzzling when you consider technology in the QQQs had a gap up day and held a positive net change. So there's another interesting little flag beneath the surface that probably needs to make a mental note of that, of course, and I'll backtrack here. The other one is the small caps. For those that joined us lately, the small caps are not looking too good. Banks again, there's our IWM. So that's about it, guys. It looks like the only thing that looks poised to me at the moment, and that It's just what I see. Anything can happen tomorrow, but the ones that look poised, are the healthcare and the biotech stocks to me. We'll see what tomorrow brings. All right, guys. Well, the floor is open now. If you have a question about trade ideas, especially if you're a test driver, please, any question you have is not a bad question. I'd love to have it and love to help you. So don't feel bad about asking any questions if you need help. Somebody is dropping in. Brad has dropped in a chart analysis, ATNM, AT Nancy Mary. Let's see what that looks like. ATNM. Not bad. What's going on here? This is a penny stock, so anything can happen with the penny stock, but I'm going to disregard all that. All I'm going to do is what I told you a minute ago. I'm going to focus on what the footprints in the sand are saying. And obviously today was not a great day across the board, but there was really no damage done here. This is just a continuation kind of sideways consolidation. And when stocks are in a nice uptrend and they go for sideways consolidation because they got a little too far ahead of themselves, this creeping moving average coming up here is a 10-day simple moving average. In my experience is charts that look like this, once this line comes into play, probably tomorrow, you may start to get some action. Now, if you do, great. Obviously, I'm thinking that's what you want. But if it bleeds through this line and closes below it, and especially closes below this little level right here, then I would be putting my caution hat on and being very careful. So to paraphrase, I expect this moving average to force the hand of the price issue higher, of the price higher. If it doesn't, and the price bleeds back down below and closes below this rising moving average, which again is a 10-period simple moving average, then I would be very cautious about continued upward movement. All right. Waleed wants to look at Omer going long, possibly. Well, first glance, it looks like it's really riding that 50-day moving average, bled through it a little bit here, but then held on and then easily tapped off that moving average there. Friday it held it, yesterday it held it. So the 50-day moving average is definitely catching my eye here. We have earnings in 10 days. Again, single stock window, earnings coming up in 10 days. Doesn't make money, but that's not really important to me because I only care what the price is doing, not what analysts think or what the fundamental book says. It tried to get ahead of itself yesterday. Maybe, Waleed, if we had a better market backdrop today, could have got some follow through. But again, no real damage was done. I think you just probably key off that level right there and put a price alert at yesterday's high, which is just above today's high. And it's just below that high from a week and a half ago. You might have something if your price alert goes off. So just right click, set price alert, your reasons why, and set it and forget it if you're thinking about it. Turn that off. So that blue line now became a trade opportunity. If it triggers, it triggers. If it doesn't, it doesn't. No harm, no foul. All right. Is there a way to see all charts that I've marked up, put horizontal lines? Yeah, you should be saving them. Let me show you just the basic save function. So if I go here and I want to just put in a markup that, that chart on Omer is definitely solid support, tested it twice, even 3 times. And then I go back to the SPY chart, and then I come back to Omer chart. My line is still there. If I leave the program right now, it's quite possible you might lose those. So what I recommend doing is saving your layout early and often. File, save layout, and then I like to use the default layout and overwrite it as much as possible. So any changes I made to configurations of a window, any charts that I marked up will now be there the next time I open the program. And another little tidbit, when you go to close the program, it should prompt you if you want to save the layout. If you click yes, you're going to overwrite the default layout, which is fine. But what you don't want to do is be on one of these channel bars here, go to exit the program, and then it prompts you to save the layout, and you say yes, you're going to overwrite any other default layout that you once had. So just be aware of that. When you exit the program, if you click yes on this prompt, make sure that you are on the default layout because it's going to save that layout and name it the default layout for you. So just get in a good habit of saving as often as you can your layout. And remember, Christian, that when you go to a channel bar, you can't make any of those changes stick. So if you're marking up, and your question is specific to you being on a channel bar, and then you're marking up charts on that channel bar, you're going to be not happy because they're never going to save for you. The channel bars are open source, they're static, there's no ability to make changes stick. The workaround for that is to go to any one of those channel bars, and then let's say we're on a channel bar right now, and then we like this particular scan in a channel, right click, save it to your cloud, and then go back to your layout. Then you can retrieve it from your cloud and start making changes, and those changes will stick once you've saved your layout once again. So hopefully that helped. All right, my moving averages, Joanne, I've always kept it simple. I use simple moving averages, not exponential. I use the 10, that's my favorite of all. I use the 20, which is kind of a backstop for the 10, and then the 50, which is kind of a way to test the temperature. You know, is the stock healthy? It's above its 50. Is the stock not healthy? It's probably trading below its 50. And then I'll have the 200 in there for long-term stuff. 200 rarely comes into play in terms of a single trade opportunity, but it'll start to come into play in the bigger picture, as I've talked a lot about, you know, the S&P bouncing off that 200 period right there. 1, 2, 3, 4, 5, 6, 7, 8 or 9 days bouncing off that level. It's more of a bigger picture. But then zoom in, and look at this. I'm much more interested in the 10 period. Stocks that are in momentum will stay in momentum as long as that 10 period remains below and pushing the price higher. Once they break that 10 period moving average, I say the momentum has been broken. So 10, 20, and 50, they're all simple. All right, good question, Joanne. Anybody else have some questions? Because we're nearing the end of our content if we don't. Waleed, any thoughts on the 8 EMA and the 20 SMA? I like the way you signed that, Joanne. The 8 SMA is really close to the 10 period SMA. I've tried to eyeball them and match them up. You know, they can do some of the same things sometimes, but for me, in the end, the 10 SMA has just produced more clean support bounces, or on the downside, it can provide a good place to short sell into a bounce. Stock, you know, trades down and then bounces up, and then as soon as that declining 10 period moving average starts to catch the price, a lot of times that's a great signal to do a short sell. And that's in our ebook that we talk a lot about. I think the chapter I did talked a lot about that. You know, we've been in a buy the dip market for 9 years now. At some point, we're going to go into sell the rip. You know, so stock sells up and then it rips back up. And then the order of the day in a bear market, when we get there at some point, is to sell those bounces. So I like to use that 10 period moving average. That's my favorite, and it's my favorite on a daily chart, and it's also my favorite on a 15-minute chart, because that's the time frame that I like to work in. All right, anybody else have something of interest they want to talk about? This is your time now. Let's do this. If anybody is in the test drive, we have a contest for the test drive people only. It has to do with setting price alerts. And there's an instruction page on how to do that, and there's a window that you have to submit a code to. I thought maybe real quickly I would just show anybody that's thinking about entering that from the test drive. It's available to the test drive people. You can see I've got 3 price alerts in here. Let's get rid of this one because it's already triggered. Because my point is, you can't submit any price alerts to the contest that are triggered. They have to be working, and they cannot have triggered any day prior to Thursday morning. So if you submit something that triggered on a Wednesday, it'll be disqualified. So essentially what we're saying here is you can come in, I'm just going to do this real quickly, create a price alert like that. So we've got 3 working price alerts. You can create up to 5, and they need to be in the working status. So the best time to do this, guys, will be tomorrow after the close. And then you could submit those if you're in the test drive and you have an email with the contest. And then the next step is you need to highlight all 5, even though I have 3 here. Right click and share. It'll say share 5 if you have 5. And then this takes you to the old cloud link function, where you'll basically copy the cloud link, and what it's copying are all 5 alerts. And then when you get to the page on the email that talks about the test drive contest, right click and paste that cloud code into the window where you submit your entries. Now the winner will be judged right at the bell on Friday, and the judging will take place on who has the biggest percentage gain, not dollars gain, but percentage. And keep in mind, we've modified the rules. There's no longer stocks under $1. You've got to be at least $5 or higher. So that's our new rule. $5 is the minimum price or higher, and whoever has the best complete aggregate score of percent triggered at the bell right on the close on Friday, well, they're going to win the free year of Trade Ideas as a contest promotion, contest prize. All right, I saw someone else slip in here. Holger, do the alert windows trigger on the day? Yeah, they're going to trigger right as it happens. So let's say, you know, I'll put another one in here real quick, just above today's high. Oops, I didn't mean to do that.
First of all, are you referring to price alerts, or
Yeah, good question.
are you referring to an alert, like an alert window?
Do the alert windows trigger on alerts?
Okay, price alerts, you hit it right. Okay.
So the price alerts I'm hitting, you notice how it's blue right there? Well, when it triggers, it'll be green. So, and it's instantaneous. The moment it triggers, and let me show you another trick too, guys. First off, leave your price alerts, once you've got a window of them, leave them minimized like I did here. And then if it triggers, this is going to pop up right in your face, and you're going to see an orange strip on the one that was actually triggered. It'll change from working to triggered on the status. And if you want to take it a step further there, Holger, you can even right click and go to actions and create a sound. Say, I want to hear a sound. I want to see a visual and a sound. Maybe come down here and configure text to speech. And I basically just turned my sounds on. So if we had anything triggering, the next time I'm going to see it on this screen splashing in front of me, and I'm going to hear it as well. So, and it happens real time. I mean, the moment, and I mean the moment it trades that price right there, you're going to see it within a second or two. All right. Could you do a really simple alert window that would meet the contest guidelines? Well, I'll show you what you need to do. You need to make sure, one, that, you know, well, let's see. It's going to have to be above $5. I can't do it for you, but I just want to, you know, highlight a few things. Make sure that your price is above $5. To be honest, you know, if you're trying to gain an edge and game the system, you know, you're probably going to want to stick with stocks around $5, because a move from 5 to 550 is 10%, or a move from 50 to 51 is not that much. So, you know, focus on the stocks under $10, Christian. I don't really have, I'd have to disqualify myself if I helped anybody. No. Sorry, can't do that. Good question though. All right, we're caught up. Anybody else want to chime in on something? Need some help with something? Otherwise, we're running into the end. Going once. We've managed to fill up most of the hour. All right, well, let's see, somebody snuck in. So you recommend watching all the, yes, I do. I'll tell you what, while Scott's talking, I'm gonna drop in a couple of pre-recorded sessions. The first one is called Getting Started. That's for anybody who just started using Trade Ideas and you're a little overwhelmed and you're not quite sure where to start. This is a great way to build a foundation. I'm gonna drop that video link in the chat window. The second video link I'm going to drop in the chat window would be our TI University. We recorded that series for 1 week, and again for the test drivers, it's certainly good content. So I'll be happy to do that. David missed. Oh, I missed a chart request. Oh, XPO. All right, we'll do XPO, and then we'll bring Scott in. Well, XPO got caught up in the red bar fiasco today. It looks like. You know, that swing exit down here is there for a reason. I wouldn't be surprised perhaps to see XPO test this. I don't know if you're thinking long or short. If it tested this level and then bounced back into play, one could consider maybe a long and then leaning on the support level there of 97 for the most part. If you're thinking short, well, there's two schools of thought. You can wait until it breaks this level down here, or you can maybe get just a little bit, maybe 1/3 or 1/4 of the position on the radar and watch it. But the biggest thing on shorting in the hole, as they call it, breaking down this level right here, we break down and we're in the hole. Shorting in the hole, especially in a bull market like we have right now, is really tough. The short sellers get run out pretty quick. So if you've done that, you've shorted a new 20-day low, only to be happy for 15 minutes and then see it bounce up against you, and then all of a sudden you're in panic mode. That's the reason I had mentioned earlier that in a seller's market, it's much easier to wait for those bounces to give yourself an entry because there's much more staying power. Stocks on the way down, same thing, 3 steps down, 2 steps back up. So you were thinking the long option, David. Okay, so see if it tickles this level down here and what it does at 96.96. If it recovers, it goes through and then recovers and starts to hold a bid, then that's a great safe place for an entry, and then you've got your quick out if it does go back to lows. All right, Waleed, thank you. Thank you, Joanne. Thanks, David. Brad says, does it matter if the sideways move on a consolidation? No, it doesn't really matter if it's angling down or angling up. I will say, Brad, that the ones that angle up, those tend to take off a lot quicker without people even noticing. So I would prefer even to see an angle up a little bit. That's showing that the bias, they can't even get it to pull back hardly at all. You know what I'm talking about, Andy? We see those moves.
Are you referring to what, the
sideways action on a consolidation?
Oh yeah.
Yeah, the ones that move sideways to upwards a little bit, it's like they're already tilting their hand that this thing really wants to go. Much more so than ones that might pull back a little bit. But sideways is sideways. I'll take it any day of the week if the daily chart is intact and the trend is intact. All right, so I am going to grab those 2 YouTube videos that I promised, and I'm going to drop them in the chat window. So you guys on GoToWebinar, just look at that floating toolbar. In a minute, click that little triangle, and I'll have 2 YouTube videos in there while we bring in Scott.
All right.
Hello, Scott. Let's find our right page here.
So a couple items on the way out. We have a podcast. There's a new episode out on Fridays, so make sure you're subscribed. Just search for Trade Ideas Podcast wherever you find your podcasts and add us as a subscription. And then you'll be ready to get the next one that comes to your podcatcher. We have a couple more days for you to sign up. Actually, through tomorrow night, you can still sign up for the test drive. If you're not yet participating and you're not yet a premium member, you should give it a shot. Go to trade-ideas.com/test drive. And even if you sign up tomorrow, you still get 5 full trading days. So, for example, if you sign up tomorrow on Wednesday, it runs through next Wednesday. So no worries there. We have an ebook that Steve and Andy both participated in authoring. It's very timely. It's been a big help to a lot of our subscribers this year. Just go to trade-ideas.com/ebook, plug in your email address, get it to your inbox. It's got 5 strategies that help out in a market where buying the dip doesn't work anymore, and we're currently in a crazy one. We've got a discount code that's active now, and you can use Alpha in July, all caps, to save 15% off your first month or year of Trade Ideas. It's if you're ready to sign up right now. If you're not quite sure, sign up for that test drive and try out premium for 5 days and really kind of kick Holly's tires. Any questions, email us info@trade-ideas.com. You can follow Steve Gomez on Twitter at TodayTrader. We also have @TradeIdeas and some other handles. You can find them all, just like Pokemon, catch them. Go to facebook.com/TradeIdeasPro and follow our page. That way you can share what we post with your friends and spread the love around. Thanks everyone for attending. Enjoy the test drive week. Thanks, Steve. Thanks, Andy.
All right. See you guys next time.
Later.
Thanks, everybody. See you Thursday.
Have a good one.